Thank you very much for the very nice and warm welcome words. And ladies and gentlemen, a very good afternoon to you in Vienna. Very nice to see so many people in the room, to be in Vienna, beautiful city. So I'm delighted and happy to have the opportunity to speak to you today. Before I would first of all like to thank very much the International Capital Markets Association for inviting me to your annual general meeting. The 2022 annual conference takes place in challenging times. Hopefully, we are just recovering from the COVID-19 crisis, and we hope it will not stay with us for the future. I think it's fair to say that the COVID pandemic posed significant challenges to our economy, including the financial sector. But I think we can also say that we have managed quite well to get out of it. From a regulator's point of view, it let us work on targeted changes to capital market rules, encouraging greater investments in the economy, allowing for the rapid recapitalization of companies and increasing banks' capacity to finance the recovery. With the Russian aggression against Ukraine, we are now confronted with another crisis, this time a geopolitical crisis we would not have thought it could happen. As you know, the European Union is putting pressure on Russia with several packages of sanctions against Russian individuals and entities. And the objective is very clear: to cripple Russia's ability to finance the war and to impose costs on those responsible or otherwise instrumental to the unprovoked military attack. But it's also fair to say that the war in Ukraine also has consequences to the European Union and of course beyond. In the EU, when the war started, we have seen declines in financial asset prices and some volatility in markets. To be very honest with you, we do not really consider this as a direct impact from Russia on our financial sector. The EU's financial interaction with Russia was rather modest even before the war. Direct EU exposures have considerably fallen since then. Market reactions, in our view, were rather due to the high level of general uncertainty and the expected fallout of lower global growth and the high volatile commodity markets in the financial sector. So ladies and gentlemen, in these very challenging times, is it the right priority, the right thing to speak about capital markets union? My clear answer to this is yes. In these circumstances, it is even more important to continue our work to integrate and strengthen capital markets in the European Union and to continue to deliver on our sustainable finance and our digital agenda. It is necessary to say that capital markets in Europe remain underdeveloped and only a fraction of their US counterpart. Capital markets funding is still way too small compared to bank lending for corporates funding, and European savers on average hold too much in bank deposits. While it is possibly too early to judge the impact of its actions, the European Commission continues its, I would say it's really a determined path to implement its flagship project, the Capital Markets Union. And with that, we want companies of all sizes to have access to capital markets at all stages of their development. And at the same time, we want investors, in particular retail investors, but not only, to make the most of efficient use of capital markets, to boost further income, whether it is for retirement or other important life projects. And we want to grow national capital markets as well and integrate them in a large and efficient single market for capital, which attracts international investors because and not despite of its diverse underlying economies. With the recent 2020 CMU action plan, we are on good track on a number of important legislative and non-legislative actions, and let me give you a quick overview. In particular, and many of you will know, we came up in November last year with another CMU package to enhance companies' access to finance and address fragmentation in capital markets. I have to congratulate IGMA, I have to say, because just after 4 days, where the Commission came up with a package, we had at one of our first reactions already your preliminary views. All in all, quite positive. Of course, there are some issues we need to further discuss, but I have to say it was really very, very good to see how quickly you have reacted on this package. Maybe I'm not going in all the details now, but I would like maybe to flag some highlights, and especially one which is a very operational tool, what we call the European Single Access Point for companies, financial and sustainable, and we speak a lot about sustainability this afternoon, financial and sustainability data. Because once established, this single access point will be a very practical tool, making it easier for companies to attract investors. And this will be particularly valuable to attract cross-border investors by facilitating access to EU company data. Adjustments to the trading rules under the MiFIR, the Markets in Financial Instruments regulation, are also part of the package. And with that, we want to assure a more transparent and interconnected trading landscape inter alia by creating a consolidated tape of trading data on secondary markets. And I have seen at least the consolidated tape for the bond sector seems to be something which from IGMA's point of view is a useful step in the right direction. We are investigating how to identify incentive mechanism that, coupled with transparent and cost-effective capital market instruments, can enhance individuals' participation in pension schemes that are able to increase pensions adequacy by boosting retirement income. And I'm pleased to inform you that still this year, we expect a number of action to be put on the negotiation table, and let me tell you what I'm talking about. First, insolvency. Corporate insolvency procedures have been flagged by many stakeholders as an important obstacle to market integration in the European Union. The very tight links with national private laws, legal traditions make, however, these procedures very difficult to harmonize at EU level. Member states are currently phasing in what we call the Insolvency and Restructuring Directive, which already increases efficiency and the harmonization of procedures concerning restructuring, pre-insolvency and discharge of debt. However, this legislative framework does not cover official bankruptcy procedures and so corporate liquidation and reorganization. I have to say we have really worked intensively over the last months and years with insolvency experts to identify the main areas in insolvency proceedings where some level of harmonization could be both beneficial but also feasible. We will propose now, and I think we are now making good progress, an initiative by the third quarter of 2022, that is basically tomorrow, that will seek to harmonize targeted aspects of the corporate insolvency general framework and procedures. Another initiative, and you will certainly know this, is that we are working on what we call a new listing act. In particular, we want to make the listings of securities on public markets easier, more accessible, especially for smaller companies. This again means a careful assessment of what are legal requirements that could and will substantially reduce listing costs and incentives without hampering investor protection and market integrity. Here again, you can possibly expect a legal proposal from the European Commission also in the third quarter of 2022. Let me say a few words on securitization. 15 years after the financial crisis, securitization still suffers somewhat as a complex financing engineering tool, if I put it in diplomatic terms. The Commission is carrying out for the moment a comprehensive review that will look into ways to strengthen the role of securitization as a capital market instruments available to banks to help them provide sustainable and stable funding to the real economy in the post-COVID-19 environment I was speaking about. In particular, the focus will be on SMEs and the green transition. And let me now turn to what I would perhaps call the digital leg of the EU's transition agenda. Our CMU project is much intertwined with our digital finance strategy, as capital markets legislation also apply to new technological uses in finance. Removing again fragmentation in the digital single market, adapting the EU regulatory framework to facilitate digital innovation, promoting data-driven finance, and addressing the challenges and risks with digital transformation are the main building blocks of our strategy. And I have to say, our work is well on track. We are, for example, to give you something very concrete, moving forward to expand regulation in the crypto space, in particular with a specific proposal for global stablecoins and other crypto assets. So to fill the gaps in those areas that are different from what we still call the traditional financial services regulation. Moreover, new technologies and new technological uses should promote a more open finance framework where data can be shared and reused by financial institutions in providing financial services. While there is, in our view, a huge potential for data sharing, this framework needs also to be conditional on customers to agree to it and to data being subject to data protection rules and solid security safeguards. Ladies and gentlemen, at the beginning of my intervention, I said that the recent COVID pandemic has highlighted the urgency of dealing with global crisis. And this brings me to the second, the sustainable leg of our twin transition agenda. Climate change and environmental degradation are an existential threat to Europe and the world, looming not only over us, but also looming over our children. This paradigm shift includes a progressive change in investors' preferences towards more sustainability-oriented investment objectives. And I think Verena has already explained this all very well to you. There is, in fact, no doubt that the transition to a greener and more sustainable economy is still a huge endeavor. In Europe, and I think this is good news, I think we can safely say that we are in the forefront of this global challenge, a first mover when it comes to financial services regulation. And the main objective is quite simple. It is to channel more private capital into sustainable economic activities. And we are doing this with a clear, consistent, and robust framework. The foundations were laid down in the 2018 Action Plan on Financing Sustainable Growth, but we are continuously developing what we put on the table some years ago. I'm quite sure that since we are doing it now for some year, everybody knows what is the EU taxonomy, a common, still voluntary system to identify sustainable economic activities. In our view, it offers really big opportunities, in particular for carbon-intensive sectors, where change is urgently needed to attract funding for the green transition. The taxonomy regulation also includes disclosure obligations. We are well aware that the application, as this is all very new, is often challenging. Indeed, this is a new path to go for the regulator, but also for the market participants, for the financial sector. Therefore, let me tell you today that usability is a key concern for us. We have recently published a series of frequently asked questions that should help those who have to apply the rules to give legal interpretation and clarification. We are also providing implementation guidance on how financial and non-financial undertakings should report taxonomy eligible economic activities and assets in accordance with the Disclosure Delegated Act that started in January this year. And I can also tell you that we will continue to support you and guide issuers and investors alike on their way to sustainable finance. Let me, however, make one remark on what we call greenwashing, greenwashing in financial markets, which we want to address through the introduction of disclosure requirements for companies and investors. And I think with a sustainable finance disclosure regulation and a mandatory regime, we have now made quite a good process. Verena said it already for the corporate sector. For the moment, we are working quite intensively in Brussels to finalize what we call a corporate sustainability reporting directive that would also strengthen the reporting rules for companies according with information needs of market participants and other stakeholders. And once this legal text is adopted, it will of course have to be filled with a number of detailed standards which are currently developed by the European Financial Reporting Advisory Group, EFRAG. Indeed, EFRAG has recently published its consultation on a series of early exposure drafts, and I can only encourage you to give EFRAG your views on this important endeavor. Green bonds, we said it already, are constantly growing, an effective way for private investors to support the transition to climate neutral economy. And I think I can say that this market is quite booming. But a further growth also comes with challenges. For example, as the market expands beyond typical green sectors, such as renewable energies, there is perhaps less certainty for investors and issuers on what is truly green. This is why the EU, in our view, needs dedicated tools to guide investors into genuinely green investments. I'm well aware of your guidelines you have already in place, but nevertheless, we thought that it would be useful to give the European Union what we call a European Green Bond standard based on the taxonomy. Let me still be very clear here. This will remain voluntary. There is no obligation in it. But what we aim for is more or less that this European Green Bond standard may become a gold standard available to all green bond issuers on a voluntary basis. Ladies and gentlemen, let me conclude by emphasizing once again the tremendous opportunities that arise in such challenging times. If a crisis is a terrible thing to waste, you know, this sentence, we are definitely not wasting time to turn today's problems into future opportunities. Capital markets are at the center of this important period as a key tool to speed up the twin transition towards a more digital and a more sustainable European, but also global economy. So in this process, we need you more than ever to overcome the challenges we face, to go into new projects together with you as important market participants. I'm confident that there is a momentum we are all working on to bring the EU single market for capital to a successful end in challenging times. Thank you very much.